I apologize, everyone. I am officially late. By 1 minute late. I am sorry. I was sending an email for work. Unfortunately, just because you take the day off does not mean that there's not work to get done. I am also trying to get in touch with the White House's favorite quant. I told him to be by the phone, say he was available. He may not have service. We are going to try him very quickly. One more time. Just give me a moment, everyone. The last time that it is showing that he has been seen is 4:59 p.m. Lena, I'm 100% late. You are correct. I don't know. The White House's favorite quant is MIA at the moment. I am sure that he will see the link and jump on. All right. Let's get into it. S&P 7,000. Are we going to get there? Your guess is as good as mine. Let's see. We are at 6,904. Maybe we get there. Maybe we don't. Either way, hell of a year. Hell of a year. So I should say to everybody my famous words. Take a moment, read the disclaimer before we really get into it. I really want to make sure that everybody understands that I am not your financial advisor. I am not a financial advisor, and we all make our own decisions. I just do a lot of research and put together videos for entertainment and educational purposes only. So please read the disclaimer and then come back to the video. Thank you very much. All right, everyone. I want to really talk about Meta, but before we do, let's talk about what happened in the market. If Steve is wrong, we do not write, we drink milk. Remember that, everyone. So S&P was down 0.13% today. NASDAQ was down 0.24% today. The Dow was down 0.2% today. It looks like low volatility, low volume, a rotation underneath the surface is what I'm seeing in the communications sector. Meta Platforms led. They had a pretty interesting acquisition that we will get into. Fed minutes are out. The markets did not panic from it. There's no major shocks from what we got, and it reinforced that the committee is not unified on the next step. We knew that. I am not anticipating a cut in January. I'm also not expecting a cut until May or June. So we'll see what happens. Economic data that was released today, the housing price index increased 0.4% month over month, plus 1.7% year over year. Dallas Fed regional survey, Texas manufacturing production index fell negative 3.2. Let's see what else we have. Meta finished up over 1%, which was good. Tesla down. Oil's hovering around 58, which I like. So I think everybody who follows me knows I'm a very big Meta bull. I think last quarter was misunderstood. They had a accounting. It was not an issue. They had to take a one-time charge due to new accounting rules from the big beautiful bill. This is a one-time cash charge, one-time non-cash impairment that is only going to account for a negative impact in Q3. When we get the Q4 numbers, this will be cleared up. We will also see Meta's earnings in Q4 and forward be stronger from these new accounting rules. They had to take this charge. And once again, thank you everybody for being here. Seeing a lot of regulars. Chels, thank you for being here. June, thank you for being here. Lena, thank you for being here. Pedro, thank you for being here. Mantis, thank you for being here. All the regulars, really appreciate everybody hanging out with me after a midstream. Going to try to have some fun in a little bit. So I'm very bullish on Meta. I've been very bullish on Meta. I've actually owned Meta since the IPO. And right now is a monumental shift. Meta Platforms has agreed to acquire Manus. And for those of you who are unfamiliar with Manus, it's an AI startup which is known for agentic software that can complete multi-step tasks autonomously. The financial terms are not disclosed for this yet. There are multiple reports that are pegging the deal around $2 billion and some estimates as high as $3 billion. So $2 to $3 billion for the deal. Meta's got that in cash on the balance sheet. So very excited about that. A key headline detail for me is that Meta said the acquisition will fully sever remaining China ties, reflecting the geopolitical sensitivity around AI supply chain and data. So let's get into what Manus actually does. They built a general purpose AI agent, which is software designed to plan, decide, and execute workflows with minimal prompting. Basically, research, coding, analysis, business tasks, rather than simply responding like a chatbot. The product is positioned around from chat to action. And it can chain steps together, like gathering information, synthesizing outputs, and generating deliverables for work style use cases. Manus has been subscription led, and reporting indicates it scaled very quickly as they've reached 100 million in annual recurring revenue, which everybody calls ARR, within 8 months. That's a lot of scaling in 8 months. The company is currently based in Singapore and has Chinese roots, which is part of why Meta used sever ties language in the release. So the deal details, let's see, is Matt, he's still not here. He still hasn't looked at WhatsApp, everyone. So I'll try him again in a few minutes. I'm sorry that you guys are just stuck with me for a little bit. When I look at the structure of the deal, I'm pretty happy. It's an acquisition, not a minority stake, and Manus will retain its brand to continue selling subscriptions even after joining Meta. Very interesting. 2 to 3 billion is what the estimates are saying. And Axios reported that the package could be about 2.5 billion, including retention compensation. Reuters had reported that Manus raised 75 million earlier this year at a 500 million valuation round. It fits into Meta's ecosystem very interestingly. Meta already had distribution at scale between Instagram, Facebook, and WhatsApp, and even Threads now, which people overlook. And in Meta's disclosures, more than 3.4 billion people use at least one Meta app daily, and Meta's AI reach was described as more than 1 billion monthly active users. That makes agentic AI a productization and distribution problem, not just an R&D project. Manus plugs into Meta's AI pillars with Meta AI for the consumer assistant, business messaging, WhatsApp, Instagram, Facebook. It is expected to create more engaging experiences through recommendations and content discovery. It is expected to increase advertising from creation and performance. and is expected to help AI devices through their smart glasses and next generation interfaces. The acquisition is basically a bet that the next wave is AI that does, not that doesn't. So we're going to see. I got to tell you, I'm very bullish on this. And the consumer agents inside Meta AI, this is going to turn Meta AI from an answers engine into a task engine, in my opinion, where people are going to be able to do trip planning, research briefs, document drafts, and multi-step personal workflows. I think that we're going to see Meta truly turn into a suite of products that can rival Google's suite and maybe even Microsoft. I don't know about Microsoft, but maybe Google. So I can't believe it. I just said Google. Can't believe it. Talking a lot today. And it's going to create a creator flywheel where the agentic tools can automate parts of the creator workflow, from idea generation, scripting, editing, distribution planning, and increase content velocity and platform engagement. When we think about where this is going, this is a very big acquisition for Meta. I'm going to bring up the actual numbers and why I think that Meta is a unloved company in the market, that this deal can start to change that narrative, especially if Zuckerberg comes out on the actual earnings call and doesn't mince words around CapEx. This can give them a clear velocity of what they're doing. So here we are. Let's get rid of that. Meta for the year is up 11%, which is pretty crazy considering that we were down hard after Q3 earnings. $1.66 trillion company. When I look at the financials, this is something that I love. Not selling, have no interest in selling. And I had said if it kept falling, I was going to add more, even though I have a large position in it. Just on a year-over-year basis, and the full year's not done yet, so I'm expecting them to come in around 195 or 200 billion revenue. In 2024, they did 164.5 billion. I'm realizing this is a little small for everybody, so I'm increasing it. Massive growth on revenue. 2020 was 86 billion, then they went to 118 billion, then we go to 116.5 billion, 135, 164.5, and we're likely going to break 200 billion this year. Huge amount of gross profit, huge margins, 155 billion. This is a company that's not stopping. And when we look at operating income, 80 billion, call it 81, what is that, 43% or so operating margin? Great margins. When we look at cash flow statement, they're buying back a ton of shares. CapEx is going up, okay? CapEx is basically doubled, which is fine because it's all being paid for from cash from operations. And cash from operations has dramatically increased. We go to how they're generating value for shareholders, 44 billion in buybacks over the trailing 12 months. They did 44 billion last year. Maybe this goes up a little bit. Maybe they bought more back after the big dip after Q3. And they recently started a dividend program. They're returning around 50 billion a year in capital to shareholders. It's really good. You look at the balance sheet, ton of cash on hand, over 44 billion. You have another 25 billion in long-term investments. When we look at the debt, 28 billion, call it 30. They still have more cash on hand, even after the Manus deal, than their long-term debt. And from an EBITDA standpoint, before taxes, depreciation, they are generating almost $100 billion. Financially, this company is a powerhouse. When I look at their forward earnings potential, the street is expecting 20% of EPS growth next year and then 10% after. This is trading at 26 times this year's earnings, 22 times next year, under 20 times forward. And that's after today's little bump. We got revenue mid-teens for the next 2 years. I truly think Meta is going to get to, and I hate giving price targets, but I'm going to give one on Meta. I do think that we're going to see Meta between 750 and 1,000 next year, and I do think we're going to get a split next year. I think if Meta gets past 750, Zuckerberg will split shares. And I think it would be a great thing for people, or for Meta, because it'll increase volume. I really want them to split. I think splitting is good for the market because it allows more people to buy, even though it's the same valuation on market cap. Even though if they did a 10-for-1 split, the 10 shares would represent the same exact value as one share. Psychologically, it will just create a bigger volume for the stock and more people will get into it. So I'm all for it. I think we got to see an increase, though, for that to happen. Volume does not mean increase, but it could lead to more inflows than outflows, which could create an increase for stock. So that will be very interesting. I think Meta is going to do very good next year and the year after. I don't think that they really have competition. And when you look at the best bang for the buck, whether it's a company looking to advertise or do marketing, no better place. The advertising dollars on Meta, it's them and Alphabet. I would think more companies will be geared toward Meta only because of Instagram, but that may not be the case. Alphabet has a huge platform for ads as well. There's no better place than the two of these companies, and I'm not seeing any other platform rival them. Amazon is gaining. We'll probably see Netflix gain a little bit, and we'll probably see PayPal get into it. I still don't think these two are going to be dethroned, and I think that they're both going to grow. AppLovin is coming from Meta. Good luck. I hope they try. Good luck. Now, we also have glasses, wearables. I think we're a little far off on that, but we'll get there at some point. So we're going to try the White House quant once again because I know that he really wanted to come in and stream. He called me about this. No, maybe he got caught up with something. So let's get into how am I showing off an iPhone? I mean, there's two phones you can get, an iPhone or an Android. I have an old iPhone. I don't have any new cool technology. So let's get into next year. Based on everything that I've read, I do believe that we're going to have a strong 2026. And when I go through the economic projections coming out of the Fed, it's indicating that they're expecting GDP growth to be 1.7% for this year, 2.3% for 26, 2% in 27, and then 1.9% in 2028. The Fed is indicating that we will experience a reacceleration in 26, and unemployment will start to decline to 4.4% next year, and then get down to 4.2% in 27 and 28. Unemployment has been my biggest fear in this market. Unemployment is a leading indicator of a recession. We are at a critical level because unemployment has increased by 1%. over the past 2 years. Every time that we have seen unemployment increase by 1%, we've either been in a recession or recession has just started. If unemployment can taper off here and start to come down, that would be great. We're also getting projections that inflation is going to finish at 2.9% for this year, fall to 2.4 for next year, and then 2.1% for 27, and then 2% in 28. The data to me is signaling a Goldilocks scenario for the economy as growth improves, inflation cools, and the labor market holds together. We got the latest CPI report at 2.7%, which was well below the consensus estimate of 3.1%, and GDP growth for Q3 came in at 4.3% compared to the consensus estimates of 3.3%. I went to Truflation. It has the U.S. index at 2.16% right now, and Kalshi has Kevin Hassett at 41% chance to become the next Fed chair, and Kevin Warsh at 35%. Either pick, in my opinion, is going to be incredible, and they're both proponents of lower rates, and I think that their energy is going to reinvigorate some of the real big doves, such as Stephen Moran, Chris Waller, Michelle Bowman. And I think that they're playing it middle of the road, such as Mary Daly, Philip Jefferson, and Austin Goolsbee, and John Williams. I think they'll become more dovish. And I think it'll significantly outwear Bostic and Schmed. So I really do see 3 rate cuts next year. Even though I don't think we get our first rate cut till May or June, I think that we're going to get 3 rate cuts next year. CME Group is calling for 2 rate cuts. And I do believe we're going to get down to close to 2.5% on rates on the Fed effective rate in 2027. This would mean, in my opinion, that the housing market gets unlocked, where we would see a lot of areas of the economy get unlocked. You would have carrying costs on debt decrease. People would be able to refi. It would be more effective for people to take a personal loan to pay back higher yielding debt. Companies will be more incentivized to borrow, to expand. And I think that this will create a situation where the economic environment will be in a position where we expand growth. And when GDP growth expands, companies tend to do better because they're generating more revenue. And if inflation is coming down, there's a very good chance we're going to see earnings expansion. One of the key themes I'm seeing for next year is productivity increases. Maybe we don't get an all-out rally from the Mag 7. I do think the Mag 7 will bring us higher. And I think that this is going to be a market where old school conglomerates implement and utilize AI and robotics and can catch a bid. I am very optimistic about 2026, even though there are certainly scenarios where we could go down 5, 10, 15%. I'm not seeing a reason for a bear market, but we could certainly see a black swan event come out. So we'll see what happens. It is going to be an interesting year, to say the least. There are companies I think are very undervalued here, companies I'm interested in. I am interested in Broadcom these days. I have not pulled the trigger yet. I don't think I pulled the trigger. Did I pull the trigger? This is bad. I don't even remember. I was looking at it the other day. I don't think I did. I'm pretty sure it was just VG and Nebius. Now I'm questioning myself, which is not good. Hold on. If I did not update you, if I made this trade and I didn't update you, I apologize. Got a lot of stuff going on. All right. Hey, Ray, what's going on? Michelle, what's going on? All right, we're just logging in. We're waiting for the security code to do its work. Apologize. Give me a sec. The hell just happened? Kick me out of my own account? What the fuck was that? Hopefully, everybody has some good plans for tomorrow night. Otherwise, Amit, myself, and maybe some other people will be live tomorrow. I mean, Amit and I definitely will be, but see if anybody else wants to come hang out with us. Everybody is more than welcome to come and hang out if you have nothing to do or if you're staying home. We'll be going over our full blown projections. We made a stock draft to see which company is going to do the best next year. All right, I am in. I was second guessing myself. I did not buy it yet. I am looking to buy Broadcom. I purchased Venture Global and Nebius last week. So Broadcom could get bought tomorrow at this point. We'll see. There is cash in this account, so could get bought. Look at that. Nvidia's up to 187. I love that. Guys, Palantir 180. I know everybody saw Steve Zabera on Palantir. Company doesn't even do 4 billion in revenue right now. They'll get to 4 billion after this quarter, but 100 and something times sales, come on. Be very careful. That's all I'm going to say. Be very careful with that one. Microsoft still at 488 is very interesting to me. I think Microsoft can do well next year. I would not be surprised if we get a rotation from Apple and Alphabet into Meta, Microsoft, and Amazon. I think that those are going to be the three that take the Mag 7 higher. I don't necessarily think that Apple and Alphabet will continue much higher on this, but NVIDIA I do think is undervalued here. And I think NVIDIA is a very interesting one. So we'll see. We'll give all of our full predictions tomorrow. We're going to go live tomorrow at 8 o'clock or 8:15, that area. 8 or 8:15 tomorrow. So we'll be here for everybody. Maybe I'll have my sign hooked up. We'll see. Let's see. Yeah, I did say Nebius. I am in Nebius. Look, NVIDIA, I think, is going to do very well. For me and everybody else, I hope it does. It is 6:44 for me. I am on East Coast time. So 8 or 8:15 p.m. East Coast time tomorrow. You want me to show you guys want me to get in trouble. You guys want Bezos to shut down my freaking Amazon account, don't you? Hold on. Let me go into the history and find it. Bezos, where are you? Here we go. All right. So if you didn't see the stream with the Mitt earlier, I was not trying to be funny. I was being 100% serious. And what I said to Amit is Bezos needs to stop looking like he's getting off the set of Yellowstone and get back to the boardroom because we need Amazon to pump next year. Okay. I mean, the guy, I don't have a problem with any of the other pictures in this. Okay. Him and his wife are at a luncheon party. I have no problem with this. Okay. I have no problem with them being a black tie event. The guy looks like he's coming off the set of freaking Yellowstone. Okay. Looks like he is going off the set of Yellowstone. We need this guy back at Amazon. I don't even know. What I know is Amazon is not performing and we need Bezos back. All right. We need him back. So I hope that gave everybody a good laugh that wanted me to bring up the Bezos picture. So, oh, I'm not saying he hasn't earned it. He has earned it and then some. I just would like Amazon to, do a little better than it's been doing. Guy's definitely deserved it. He's one of the most amazing business minds ever. And you know what? Got to respect it. But I'm really hoping that Amazon can pull through for us. Amazon to me is a multi-year play at this point. I am not sure if it will outperform the S&P next year. The full thesis on Amazon is as inflation works its way through the system, Amazon's input costs will decline. As energy subsides around here, we'll really start to see that impact throughout the numbers. I believe their expenses will go down a little bit from both sides. At the same time, as margins expand due to robotics and AI, which should allow them to get to a much larger operating profit, which should allow the multiple to expand. Over the next several years, I do think that Amazon is going to reach 6 or 7 trillion. My target is 2029, 6 to 7 trillion, because I think that they are going to come in between 150 to 200 billion in operating income. A more exact numbers, I'm really targeting 180 billion. Next year is the real stepping stone of this. So we gotta say, whoa, 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 whoa. What is this going on? Ray, what did you do? You moved it over. What did you move over? From Chase for a 2% match. So I guess you're talking about Hood. A year ago, I tried to buy Brookfield Preferreds on Hood. Huh. How many people took advantage of the 2% match with Hood? I'm interested on that. I know some people that are taking advantage of the 2% in a big way. Big way. It's a little, yeah. Listen, Bezo is definitely a little busy. I like him to be busy in the boardroom, not gallivanting. Wow, a bunch of people. Look at this. All right. I guess I was wrong on Robinhood. I mean, I didn't see it. I didn't think people were actually going to leave, but you know what? They're even tempting me to leave. I mean, give me 2% to do nothing, just move my account. I mean, shit. It is tempting. Okay. Definitely tempting. All right. So the next theme I am seeing for next year. This is going to surprise some people. SoFi. No, I'm kidding. It's not a surprise. SoFi, I think, is going to do very well. I'm not really going to get into everything with it, but I do think SoFi is going to do well. Salesforce is my dark horse. I'm going to come up with a few other ones for next year, but I do think energy is going to outperform next year. And I think financials are going to outperform. I think the trade on Citigroup is done. I think regionals could do better, but I would not be surprised if Hood and SoFi continue to do well next year. I don't know if value is going to outperform growth, but I do think we're going to get an everything rally. I am very interested in old school companies like Pepsi. I mean, Pepsi here is interesting. Is it going to outperform? I have no idea. And quite honestly, I don't even know if it's worth going into this instead of an index fund. Pepsi's been absolutely horrible, but the dividend's around 4%. It got up to 194 back in 23. It's at 144. Can it get back to all-time highs? Maybe, if they can increase their margins. But I think one of the big themes for next year is S&P 500 index funds become more popular because a lot of people, I think, are realizing a lot of these high beta names, it's just not sustainable what we've seen. Maybe we get a big flush out at some point next year. Companies like Chevron, in my opinion, which I'm now a shareholder of, I do think Chevron is incredibly interesting when you think about actual business sense and by the numbers and take the name of the company out of it, okay? This is a company that's up 6.5% over the past year, but it's been consolidating since 2022. We look at it on 10-year, the market has absolutely destroyed this investment. You could have got, I think, 230% in an S&P 500 index fund. But you look at this is consolidated for a long time. It is trading at less than 10, or I'm sorry, it's generating $7 of EPS. It's trading at 20 times this year's earnings. And when we look at forward, it's got a lot of EPS growth, not next year, but the year after. A lot of EPS growth there, trading at 15 times forward. And they're doing huge buybacks. So when we look at the cash flow, they're doing about 16 billion in free cash flow, and they're buying back $13 billion worth of stock while paying out around 12 billion in dividends. Huge amount. I think that upstream producers will catch a bid. I think we're going to see consolidation. And the big thing that Chevron's got going for it is the Hess acquisition. I think that we're going to fully monetize it next year. And Chevron could do really good, especially in an environment where the Fed is lowering rates and their yield is already above the risk-free rate of return. If Chevron, so let's put it this way, if capital comes back into the market from money markets, Chevron could be a play simply on that note. 38 years of dividend growth, 5.8% average annualized growth rate on the dividend. I mean, this is a cash machine for a lot of people. So very interesting. But when it comes down to it, I don't think the king of AI is dead, and I think NVIDIA is going to continue to do well. I would not be surprised if we see NVIDIA 225 or so, 250. I think that those will be very strong numbers for next year. And I think NVIDIA's got at least 2 or 3 years of solid growth ahead of it. We'll see. Sam, you did get scammed. Matt's the one that called me and said he wanted to go live. I told him I was going live with the mid. I was going to make the stream during that stream, and I would send him a text. His only job was to stay by the phone. I am hoping he did not get kidnapped at this point. I called him twice. I'm going to send some pigeons out, some smoke signals. I don't know. Yeah, Pepsi's a dividend aristocrat play too. I think there's probably more upside in energy than Pepsi. And quite honestly, I don't even know if they're that interesting. I do think energy catches a bid next year. I mean, Chevron is, I think, going to do very well. Just talk for you. I can't believe people show up just for food and movie talk. We're not talking movies. Movies will be done at 9 p.m. tonight. Where Tanner, at the end of that stream, Tanner and I will be discussing Meta, NVIDIA, Salesforce, and some other things. We are going to present our movie list too, so that will be fun. Bloom Energy, I don't really have any thoughts on at all. I think you guys know by now, I don't take a lot of risk compared to other people. I tend to stick with what I understand because I don't know more than anybody else when it comes to it. I just do the research, and Amazon's one of the plays I'm sticking with for next year that I'm going to add into. I'm going to stick with NVIDIA. I may add to NVIDIA, even though it's a large position, and we'll see what happens. But I do think that one of the plays I'm going to continue adding to is Salesforce. I think I added to it, the last time I added to it was last month. People dislike it. That's when I really start to get interested, because sometimes there is money to be made in aspects of the market that are being overlooked. And when it comes down to it, I am not interested in people's opinions of the product. I'm interested in what the IT directors and what the decision makers are doing. Nobody is leaving Salesforce. Salesforce's revenue continues to grow, and their AI offerings continue to grow. Huge profitability, huge buybacks, very undervalued, and on their trajectory, I can see them going back to 350. So if I'm right, I'm right. Oh, God. Sam, if you want to come on, you're more than welcome. Tell me if you want me to send you a link. I can't believe you're going to Costco for the second time this week. Jesus, I feel bad for you. I have a love-hate relationship with Costco. It's a cool store, but I would need more than one shopping cart. I'm not allowed to go there. I am not allowed to go there. The amount of candy I will buy at Costco is disgusting. Look, anything's possible for 2026, but I think we're going to see S&P 8,000. I really do. I think the market's going to be bullish. I also think we're going to get a flush out, and I think we need a flush out. No, I can't believe that you spent. How do you go to Costco and spend less than $100? That's crazy. Unless you're going there for something specific, that's crazy talk. And yeah, I like Amazon because it comes right to me. I am still buying BM&R. Let's hit 7,000 first. Yes, we should hit 7,000 first. Can get to S&P 8,000 without hitting 7,000. But remember, everybody was scared of their own shadow in the spring. We were fine. Something's going to happen. Something's going to blow up next year. In the long term, we're going to be fine. We're also going to have a lot of benefits from lower taxes next year. And I think some of that capital is going to come back into the market. So I'm excited about next year. And one of the reasons why I'm excited is because I keep putting into an S&P index fund. I love it. I mean, it allows me to get a very small dividend, throw it back in, compound. And when the market goes down, it's a hedge against everything else I do. Very, very excited about the S&P. I actually would like to build my own S&P index, but I'm not in a position to do that. So I am glad you guys liked the video from last night. I am planning on doing more videos like that. It is not going to be tonight. 2026, I am planning on doing some pre-recorded videos instead of a bunch of live streams, in addition to the live streams, with dedicated videos on specific topics, just like we did last night for about 95% until Matt and I started goofing off and entered the Thunderdome. I think that we need to normalize not romanticizing huge gains or trying to make 50% or 100% in a year. It's not realistic by any means. And becoming a millionaire at 25 is not realistic. And we need to get ready for normalized returns and doing research. And if you do 20 or 25% a year, you're doing really good. Got news for everybody. So I will be doing a lot more content like that. I think it's needed. And look, I'm telling you, I'm not going to be surprised if we see the market go down 10, 15% next year and a lot of people get called on margin and we see a flush. Be ready for that. But even if that happens, I do think that we will be fine coming out the other side, just like we always are fine. And next year should be, in my opinion, everything rally if the Fed is correct in their assessments. We have everything going for us next year. Unemployment should come down. Oil's at a low price. Inflation's down. We have GDP growth being strong. This is all a setup for EPS expansion. If you get EPS expansion, we're likely to get higher price targets. Stock market is likely to go up. So, fingers crossed, that's what's happening. It already looks like it from where the Fed came out with their economic projections. Let's see who Trump puts in as Fed chair, and let's see if we can get rates down 75 bips next year. So, very interesting. Oh, June, I'm sorry, wasn't looking at the chat. I was just going off with the dome. Evan, if you're here, if you want to come on, let me know. And Sam, if you want to come on, let me know. I mean, more than welcome, both of you. I'll send you guys a link in X, I guess, if you want. Hold on. In 2026, I need to freaking redo my setup in my office. I can't have this wire here, my freaking microphone. It's annoying. I need to get a boom arm and some other stuff. X.com. Why do I have all these messages in freaking X? Like, it's so weird. It's all freaking bots. It's crazy. Evan, I'm looking for you in here. Hold on. Here we go. So I just sent both of you link on X. If you want to come on, more than welcome. I am only staying on until probably 7:30, 7:45. And then I need to do a few things before Tanner and I go live at 9. Evan's coming on 5. Okay, cool. Milk pick? I don't have a milk pick. I need to bring the window back. Window didn't go anywhere. It's right there. Still got the window there. I still didn't have my monitor tilted that way. Why does everybody think that's a milk jug? That is a 1 gallon of distilled water for my humidors to keep the humidity at a regulated level. One of them is an aging cabinet. One of them is traditional humidor. Where does that door go? That door goes into the hallway, which goes to my kitchen. Oh, you guys are making me hungry. Whipped cream on chocolate chip cookies. Love it. Love it. Love it. Love it. The Yankees have done nothing because Brian Cashman sucks. Okay. They should have got rid of freaking Cashman in 2001. Cigar recommendations, non-Cuban, Opus X Perfection. It's amazing. Amazing. I bought some STWD last week, not this week. Midwest, we're not even going to touch that comment. Yes, I still own dividends. I don't know where Matt is. I'm hoping nothing happened to him at this point. I mean, he hasn't looked at WhatsApp. He hasn't done anything. So I don't know. The Fed is expecting unemployment to decline next year, which would be nice. So let's see. Yes, Robert is right. Matt has an emergency meeting in the White House. The White House, Quan has an emergency meeting there. David Sachs needed to talk to him. I'm with you. How much do you want to bet my hair has no product in it? How much do you want to bet? It's called combing your hair like this your whole freaking life. I mean, if my hair didn't have product in it, I wouldn't be able to move it around like that, right? So, no product, guys. I don't use any of that crap in my hair. I comb it when I get out of the shower and I just let it dry. I didn't walk outside. I don't know what to tell you. PB, what's going on? We will say turn around like in Scream if door open. Thank you. I appreciate it. Somebody's trying to stab me. Please let me know. What's up with Baby Yoda? Grogu's awesome. Waste management? I don't know. I don't really follow them. I can't tell you anything. And yes, I'm going gray, everyone. It's called aging. Okay. I'm too lazy to shave. It's cold out. I don't shave as often in the winter because when I walk outside in the city, it's like a freaking wind tunnel. So. Jimmy Johnson. I don't even know what the hell Jimmy Johnson hair is. I don't even know what that is, guys. I don't know. Love-hate relationship with Sopranos. Sopranos, I loved it first time around. I loved it when I rewatched it. And now I can't even get through a full episode without hitting fast forward. I can't watch the scenes with the kids or Dr. Melfi. I just can't do it. But it's still one of the best shows ever made. Let's not talk about Silver. Come on. I did say if Hood got a decent enough pullback that I would enter into a position. I actually have not been watching Hood. Where is it? Let's say. So, it's a 115. All right. Still got to go lower. I think around 75 is what I was thinking. So it's still got a ways off. I think the comps on Hood are going to be difficult next year. So we'll see. Thoughts on Zeta? Didn't I look at this the other day with everybody? Chels or Lena or Ray or Michelle or someone, let me know. I mean, I could have swore I looked at this the other day, right? I feel like I did. Yeah, I felt like I had no interest in it because the numbers. So, yeah, I wasn't interested because of the numbers. So, I know it's catching a bid right now. I'm not interested. That doesn't mean it's not going to work. So, June, Zeta, we looked at it the other day. Evan, what's going on?
Hello, my friend. I appreciate you letting me come on the channel. How you doing, sir?
Good. How about yourself?
I'm doing fantastic. I was almost gonna tell you 10 out of 10 background, but if the Yankees jersey was a Mets jersey, then it would have been perfect. Besides that, 10 out of 10.
You know what?
I thought, am I getting kicked out right away?
No, I mean, the Mets and the Yankees can't do anything right. I can't be mad with the Mets. I mean, it's just neither of these teams can do anything right. It's crazy.
I've never seen one of my teams win a championship. I chose the wrong New York teams. It's a rough time.
Wait, what New York teams did you choose?
Well, I was born into them, so I blame my family. Mets, Jets, Knicks, Rangers.
Oh, that's a horrible combination. Oh my God, that's torture.
Right? I don't like sports anymore.
I don't even know
No, I'm
how
kidding. I
you
love
can
it.
put up with that.
The best time of my life, I believe it was 2015 when the Mets made that run to the World Series. Nothing better.
That's crazy
The
talk.
the best I've ever seen my football team was Mark Sanchez. So
I mean, I don't know what to say to you other than I'm sorry. And I do want to show you. So, um, real quick, and then I'll bring Sam on. So, you're a baseball fan, I guess.
I
I don't
enjoy
know.
baseball.
That's difficult, but
Oh, it's signed.
oh, I got 12 inscriptions on there from Rivera.
Whoa. All right, that's cool.
Like this, unless you take a screenshot and actually have him do all this, I got shit on here that people wouldn't even think of. And I had started enter Sandman with the date of his first game, and then exit Sandman with the date of his last game on the bottom and everything in between.
I like it. That's really cool.
So,
And that's his jersey there? That's his signature there?
yeah. Sam, you're back
Wow.
from Costco and you only spent $100.
That's a lie.
Only 100. No, it's not a lie. It's not a lie. It's the second time going this week. It's definitely not a lie. I went there for one specific thing and I bought four more things, but still spent less than $100. I mean, the usual. Who goes to Costco and buy one thing? Like that? That's madness.
It's
You
impossible.
have to be a psycho to go into Costco and just buy one thing. A diagnosed psycho.
So, what do you guys see for next year? 2025 is coming to a close. We had a good year. What are your themes for next year?
I'll go first because Sam's smarter than me in the market. Shout out Uber Shorter for giving you some money there. Shout out to that guy. Um, I
Thank
much
you.
prefer
Really, really appreciate Uber Shorter.
Steven's literally going to be live tomorrow during New Year's Eve. This guy doesn't stop. If you guys are not subscribed to this channel with that bell button on, hitting the like button, you guys are missing out completely. There's some fears around that we've been up 3 years in a row, but all the themes that have been going there are still strong. I don't see a reason why we'd pull back. The last couple months, there's been chop, and we've gone more sideways in it. So maybe it's more of that even year. I am still bullish heading into next year. I'm still excited about the AI data center. I'm also in the BMNR as well. Has not gone well so far, but maybe we'll see into it. So I believe in the Ethereum theme. D Trade is talking in the chat about Rivian. Full self driving is something that I truly believe is here and is coming in within the next couple of years. So I look at the way tech is advancing and I get excited about the next couple of years. I think we're still in the secular bull market that will continue. So I don't know what any 1 month, whatever one looks like, but I am coming into this year with a bullish bias. I reserve the right to change it, but that is how I'm feeling at this point.
Yeah, I mean, look, overly optimistic for me. I agree with you in what you said. And I do think that this is a situation where there'll be chop. There'll probably be period where we're 10 or 15% down. But ultimately, I think that nothing's going to change GDP growth unless we have a black swan event. And when you start getting strong GDP growth in a situation where inflation is down and oil and gas are at the levels it's at, I think we're going to see an everything rally at the end of the day because I think we get margin expansion and earnings expansion, which will take the market higher. It'll be interesting. Now,
And I do
Rivian, something I don't follow. So enlighten me. What is Rivian doing that's interesting?
so no, I'm not super interested in owning just a car company. Transparently, I'm also not super interested in owning an EV company. I don't necessarily see why that is going to change stuff. Rivian, they had their recent AI day, so there was some excitement about that over the last couple weeks. I believe it was early December. So there's, is Rivian going to just be a car company, or is it going to try and take that next step? Rivian fundamentally has no way to profitability at their current cars that they're making, the lines and everything like that. But the R2 line, which they have coming soon, the car, all that stuff, the next version of it, is where the numbers can start to tweak a little bit. So yeah, part of the hope is that, as Ralph says, Evan, get off ChatGPT. I bet you there's mistakes in what I'm saying here. There's no ChatGPT. So half of it is can Rivian become more than a car company? The other half is as they make adjustments, as they bring on their new line, as they bring on their new car, there actually is a more structural path to profitability. And who knows? Transparently, if it is just the R2 and the new line and everything like that, I would not be interested in Rivian because it probably would be just maybe a decent hold. Maybe it comes into the car companies. I'm excited about autonomy, so that's why I am excited about Rivian. The fact that it was priced as there's no autonomy in this. It's a company that probably is going to go under. It's moved up a little bit over the last couple weeks, so maybe that calculus has changed a little bit, but I still don't think a Rivian autonomous future is priced into the stock at all. And I have it in my flyer category. Maybe there's a 10-20% chance it works. I think if it does work, there is more than 10x, 15x% coming off of it. So the numbers just kind of work out in what I have seen.
Sam, how about you? What themes are you seeing for next year?
Wait, hold on. I totally missed what Evan said. I was switching to a wired connection. In order to get a wired connection in my kitchen, I have to literally take a 50-foot Ethernet cable, bring it all the way across my house into my computer.
All right, I have a solution for you.
What?
And I'm not trying to be funny. That's a real solution because I have it right there. Why don't you get a MeshNet system, which is your router plus 2 satellites, and throw a satellite in the same room where your computer is and just run a 10-footer?
That is still a wireless network because when you do a mesh network, it's just connecting both of the mesh routers exclusively to each other and then using that wireless connection. But I'm trying to avoid wireless connections altogether to reduce the latency. So, but don't worry, it's going to be resolved in a couple of weeks. I'm moving into the office and everything.
You're not wrong. You're correct on that. But the latency from a mesh net versus just a standard router is significantly different. I have very minimal latency on this.
And I'm not doing that. The only reason I'm not doing that is I have nothing against it. The only reason I'm not doing that is because I have a $400 wireless router sitting in my living room, which is Ubiquiti, which is like one of the best hardware appliances out there for networks. And I'm like literally just 20 feet away from it, and it's supposed to reach here, but for some reason, and no, but I get it. If I get a wireless mesh network, I don't want to do all that. I just want to keep it one good
Sam,
enough.
You're an engineer, right?
Yeah.
Get later tonight. I think it's called Wi-Fi Analyzer. Download on a laptop. See if there's anything interfering in your room, in the room you're in.
Oh, there's a lot of things interfering. That's for sure. Yeah, no, there's a lot of things interfering. That's for sure. I mean, well, I live in LA, so but yeah, I would do all that. Okay. I even tried to do all that. Actually, what was it like a week ago? My entire router crapped out, and like when no internet in my house is literally code red because my wife and we both work remote, and then I got the streams and everything. Like Evan, you know this. Like I was like that's when I was like, dude, my wireless crapped out. My router crapped out. I went to Best Buy and bought a router just so I could stream that day, and I mean, anyways, like I went through the whole thing, rebuilt it, whatever, but this is all going to be resolved because if I'm wired, then I have the failover and everything. Like it'll be good. But yeah, no, I prefer to be hardwired, if anything, just to reduce anything, get that exclusive connectivity. All right, I don't mean to nerd out or anything, so I'm just going to stop right there.
Yeah, so let's get into your themes for next year.
Well, I mean, it's definitely going to be Amazon. That's one of my biggest themes for next year. That's been my theme for many years. Still is my largest position in the port. But you know, we can't get Bezos to stop selling. And then he stopped selling, and then his ex-wife started selling. And it's like, why can you guys just stop, please? Can you stop? But I mean, someone's gonna fund Blue Origin and their life at some point. But I still think Amazon is going to have the reacceleration and re-rating that it's supposed to be long deserving for the last couple of years. They're probably going to go to like 21%, 22% AWS growth, which is pretty extreme because that's a reacceleration of additional 2% beyond the 20% from last quarter, and they're already a $125 billion company. But you already see XAI News today, third large data center, and then all these other companies with high capex. I think AWS is going to be right up there. And I think that triple digit growth in terms of AI revenue that they're having in AWS is actually going to start translating to a meaningful top line growth. Because I think that's really what's holding back. Like its margins are there. Obviously, the operating profitability, the free cash flow obviously is not there because of all the capex that they're doing. But I think the market's going to be forward looking in terms of that capex starting to slow down. Not that it's going to be going down, but the fact that it's going to be decelerating, because right now we're in the accelerating phase. We're probably going to have a digestive phase at some point next year, but I think that digestive phase is going to be very short-lived, because then you'll start seeing the delivery of the top line revenue coming toward AWS, Google, and Azure. And I think that's actually one of the reasons why a lot of investment banks and everything are actually bullish on Microsoft, because Microsoft is the leader whenever it comes to software, as far as annual recurring revenue, productivity, Azure, and all that stuff. I really think that we're going to start seeing that translation of software come into AI soon. The only thing is that I think we're going to have a digestive period, right? At some point next year, I think we're going to have probably a 15 to 20% correction. All right. I think it's going to happen, and I think it's going to be very short-lived, like we saw last April and May. And the dip's going to be bought. The dip is always there to be bought. We're not in a rate hike cycle. We're in a rate cut cycle. And I would even argue we're going to be actually in a loose monetary environment for probably 5 years. I think it's going to last for a while. I don't think any current term or next term president wants the Fed to hike rates. And then you're going to either have Kevin Hassett or Steve. Is it Kevin Hassett or Steve Hassett? I keep on forgetting. No, it's Kevin, because there's two Kevins being the top probability in terms of the poly markets for the FOMC chair. No one wants to raise rates. I think we already got the elephant out of the room with hiking rates of 5%, the fastest pace ever. I think we're going to be at 3% for quite some time, especially since like inflation's not going to hike up again unless we get some ridiculous injection of liquidity into the system. So I think rates are going to stay at 3% or lower for the next 5 years, which is going to create a very strong environment for a disinflationary force of AI, along with technology progressing. But I do think at some point, maybe not next year, but the year after that, there will be a 20% correction, which is going to flush everyone out and then bring everything back up the next leg up.
Well, I agree with you on a lot of things. Obviously, you heard my take on the economy, but I'm going to piggyback off of Amazon. We need this guy to get off the set of Yellowstone and get back to the boardroom is what we need.
I mean, he's still there. He even said in the last interview with Andrew Sorkin that he still works at Amazon.
I mean, sure as hell doesn't look like he works for Amazon.
I could barely even tell that's Jeff Bezos.
He's got a lot of gray hair.
Freaking Bezos. I do agree. Amazon is one of my plays for next year. I really think that it has lagged the market so much. It may take a couple of years to really work out. I see it becoming a $6 to $7 trillion company in 2029. I just don't know what the rate of acceleration will be next year. They are in such a great situation because we're in an environment where oil is at a prime level for them. Their input costs should come down significantly, and transportation should become less expensive. Rates are coming down. So expenses across the board should come down for Amazon. They also should pick up margin through robotics and AI. So I love that play. I also really like NVIDIA for next year. And I just think it's going to be more of the big names keep working and we get a little bit of a broad market rally. I am ready for a 10 or 15% drop, and I am ready for a lot of stuff to get flushed out. I am so ready for that. So we'll see what happens.
Yeah, I mean, the thing is that we've seen quite a big flush out for a lot of speculative companies and pre-revenue companies lately. In fact, I think I'm an envious bull and an Iron bull, but I think we saw the highs for at least 6 months for those companies recently. And do you remember what was it Stan Druckenmiller? I forgot who said it or who basically made that saying well known. I don't even know if it's a saying or not, but if you have, I think that was forgot his name, but if you have a 50% drawdown, you need to basically double in order to get back to break even.
Peter
Right?
Lynch.
Yeah, Peter Lynch. Okay, so if you have a 75% drawdown, you basically need to quadruple in order to get back to break even, right? It's just the law of large numbers and everything. Like it would take a significant amount of recovery, not just sentiment, but also positioning as well. Also, from a fundamental perspective, these companies are actually, the fundamentals are actually very bullish right now for these companies, but like they're cut in half, right? It will take a lot to bring those companies back to where they were trading originally. And I think the trade for 2026 might be value, might be these energy companies you're talking about, Chevron. Actually, Devon Energy is actually a pretty good one
Devon
too.
is an amazing
Yeah.
company.
Yeah, those energy companies are probably going to do a bit of catch up next quarter, and I think, next year. And I think a lot of what's not going to happen next year is seeing a lot of these pre-revenue or low-revenue companies with ARR in the 5 or 6 billion making new all-time highs. Now, I know people are probably thinking like, "Hey, why you even long this stock if you don't think it's making up?" But because I see no reason to sell, right? So if we do get the opportunity, I'll add to them, but like not right now. Like I think the moat, well, not the moat. I think the value right now in stocks going to 2026, because I'm mostly a growth stock investor, are companies that are already profitable, companies that are on the brink of profitability, companies that aren't burning cash for shareholders left and right. And honestly, it might be a little bit difficult for the mega caps in that situation, right? Like the mega caps are only going to reaccelerate infrastructure and capex in 2026 and possibly into 2027. And if that happens, we already saw Meta, they don't like it. Shareholders don't like it. And that alone could bring these stocks down, including the indices. Right? If the mega caps don't fall, we're not going to get a 15 or 20% correction. But if the mega caps do fall, that could happen.
So did you
You know,
see, and Evan, let's go with you first, these projections, what do you think is most realistic from where all the big investment firms peg next year's S&P target?
7,000 times 1.2% gives me 8,400. Book it 4 years in a row. None of them are right. No one's high enough. What do I actually think, though? I mean, what's 10% higher than 7K, 700 put into an average year, 7,700? Those guys are just taking the safe answer. I'm surprised Tom Lee's not higher. If I'm telling you my honest opinion, I am still very bullish, and I would say none of them are high enough.
Sam, what about you?
I think next year, I'm also bullish as well next year. Like I said, I think there's probably a pretty good chance we're going to have a correction. If anything, maybe like a flush out of a lot of more of the high growth and pre-revenue stocks. But it could very well happen that we just have like a 7% pullback, but a lot of these companies drop another 50%. I do think though that these targets for next year that they will change. Like if we have a 5% pullback, these targets are going to change. They're going to revise them because they always want to stay like within a certain bracket. They never want to go too low. They never want to go too high because as Evan's saying, like these investment banks and these companies, they don't want to project anything in the outlier because if they're wrong, like way wrong, they get hit in terms of their aggregated AUM for all their clients, right? So, like look what happened last April. Everyone revised their targets down when the market started dropping, and the same is going to happen if the market keeps going up. They're going to rise them higher. I'm actually kind of surprised that Yardeni Research is only at 7,700 because he is historically the most bullish, and he's also speculating double-digit growth in EPS for the S&P 500 next year.
Well, Yardeni has been talking about how he's not bullish on the Mag 7. That's why I think that he's been a big proponent about a rotation out of the Mag 7 into the bottom 493. That's probably why he's at 7,700, which makes sense if that's what happens. I'm at 8,000 for next year because I do think we get an everything rally. We'll see. I think next year is going to be a very interesting year, and I am still standing by Salesforce is going to be the catch-up AI trade. It's just too freaking profitable for the valuation.
There's no
Real
reason why
quick,
Microsoft wouldn't be
everyone,
up there either.
please go follow Evan on X. Here is his handle. Puts out a ton of research. And then Sam recently started a YouTube channel. So when you get a chance, please go follow him. Here is his channel. Throw this in there. And
Actually,
Sam
I'm
is
gonna be on the
streaming
Wolf.
during the day, I believe.
Wait. So, my show that I'm doing is also in collaboration with Wolf, and that's gonna be just on the Wolf channel probably soon. And the only reason why is because I'm collaborating with him on this, right? So, Evan, you already know. But that is probably one of the most consistent shows I've ever done in a while. I'm not streaming as much as you, Steve. I don't know how you do it. I don't know
What do
how
you
you do
mean?
it. You're streaming all
Steven's
the
an
time.
animal.
Dude,
Full-time
streaming.
streamer.
I don't have kids.
That's true.
You have 2 kids, 3 kids?
I have 2 kids.
Yeah, I mean that's where your time goes.
That's true.
So trust me, if you didn't have kids, you would be streaming more.
If I didn't have kids, you would have to like literally hold me back from being on
Yeah,
here
I get
24/7.
it. I get it. But yeah, you guys go follow Sam and go follow Evan. They put out great stuff. And I got another 13 minutes in me before I have to go. What would the two of you like to talk about?
Can I just want to say one or two things because when you asked me about themes, I kind of went more general market and didn't give you one or two things that I'm looking on.
Okay.
So quickly, the energy and the gas conversation, you're never going to catch me investing in that. But what I am excited about, Stock Talk's been talking about this on the spaces, is the grid and the electrical grid and investing in that is areas that I've been looking in. So ENS is one of the names I followed him, and I'm digging deeper into this area. But the grid kind of playing in that similar, slightly more defensive, like no matter what's going to happen, I see over these next 10, 20, 30 years, we need more electricity. We need more grid infrastructure. And I see that as a big investing area. And I see that as one of the themes that probably is going to be doing pretty well this year. I'm also excited for space stocks in the first half of the year. Those are much more speculative, and I probably would be looking more at the trades. But I think heading up to that SpaceX IPO, the market is going to get hot. And the last month or two of hotness for those space stocks might be a prerequisite, is what I'm feeling. I'm
Well,
also very
Steve, I made
excited.
a mistake because I had an opportunity to invest in SpaceX and I said no. So we'll see.
At what valuation? 800 billion?
I actually don't know the valuation. They said they were locking in shares at 275 a share, but I had to hold it for 6 months. Couldn't sell after it IPO'd, and the broker was taking 12 to 15% after the IPO. So the numbers didn't work for me because I have no idea what the hell this is going to do once it IPOs.
Yeah. So I'm looking right now at 800 billion, $421 per share is what that was at. So at 275, you were probably getting in at like what, like 500 billion valuation, if my math is correct.
Yeah, there's an investing group that I'm a part of, and they have some big connections, and they were getting in at a certain price. But the 6-month lockup and the 15%,
That's rough.
I can deal with the 15%, but the 6-month lockup, it's just too speculative. IPO, if it was IPOing at 300 billion, different story. But you're IPOing at close to $1 trillion. I don't know if I can really sit in this for 6 months if it's going down. I need the ability to get out.
Yeah. I think a lot of these IPOs, you really want to get in early.
Yeah.
I said no to the SpaceX one. I was really on the fence with Anduril, and I decided not to, only because it wasn't like it was through options exercising. And yeah, like a lot with these SPVs is that you it's like 15% you basically got to pay out in fees. It's
crazy.
total. And you are stuck with a lockout. And I don't know if a lot of people know, but like it's not like when you do one of these, you get like a plaque of like your name is on something. Like you're like with a group of people that do it, unless of course you put in like $50 million in these SPVs, right? So it's I know some people that got in like OpenAI early, which would make a lot of sense, or even like SpaceX. A lot of people got in SpaceX very early, and it wasn't even like massively growing until the last couple of years, similar to the stock market. But like Anduril was something that it seemed pretty good, right? But I would think that with a lot of these companies, especially Anduril, is that there's a lot of hype in it, but you've already been hearing that there's a lot of political tensions with Silicon Valley right now. And I don't think that's going to stop anytime soon. I think you're going to continue seeing that, especially into the midterms. And that might actually impact the market a little more than people would actually expect, right? When these midterms come up, there's a lot of headlines being thrown around, and that's going to mess with the stock market. That's why I don't think 2026 is going to be like a straight up year. I think it's going to be a very volatile year. Not like this year where we went up for like 7 months straight, but you do have midterms coming up. Like that is
Yeah, if you look at
not a comfortable
seasonality,
year. Yeah, it's
midterms can lead to some struggle.
yeah.
So when do you think Ro Khanna is going to go on all in again?
Oh, he's gonna play a little moderator between Palmer Lucky and Jason, which I don't think is ever gonna get fixed. I would have
I,
gone into Andrew.
I read all the posts from Ro Khanna, Jason, Chamath. Freeberg came out of his shell over the weekend. I haven't seen him get that crazy on X in a long time. I mean, and rightfully so for all of them. It's just what they're talking about doing to me is crazy. It's absolutely insane. The fact that they've already paid their taxes and you get taxed on everything you buy also. And now you want to create a wealth tax on illiquid assets. That is de-incentivizing entrepreneurship and is absolutely insane.
Yeah, there's a lot of people who are really speaking out about this where it obviously does affect them, but even people who aren't even affected by it, I think it's pretty unjust, right? But this isn't.
Yeah, but Sam, here's the
yeah,
big problem.
yeah.
Where does it stop? And that, it
No,
doesn't
I know
affect me
that's
one
a
bit.
thing. Yeah,
But
it's
at the
midterm
same time,
elections. Yeah.
It kind of would because like Jeff Bezos, who's already selling, would become a forced seller every single year.
right, indirectly, it would impact everybody who's in the market. Indirectly, but directly, it's not going to impact us. That we're going to have 5% of our assets liquidated. But the premise is, where does it stop? Because taxes were only supposed to be on the top 1%. We all know how that went. So what happens when it becomes $1 billion? Now the threshold's 100 million, and then it's 10 million, and then it's 1 million. And then you start saying, well, my house is worth X, my retirement accounts are X, my freaking stock accounts and regular brokerage accounts are X. And then my private business, if I'm an electrician, does 5 million revenue, but that doesn't mean that I'm making 5 million a year net. And what are they going to do? Put a 5-time multiplier on revenue? Or are they going to put a 10-time multiplier on EBITDA? I mean, it's just, the whole thing is stupid.
The whole thing is stupid. I don't think there's a chance it happens, but dumber things have gone around.
But yeah, you guys bring up a good point. There could be a lot of contention next year, which could impact the market. So it will be interesting. Sam, are there any other plays that you're looking at next year?
Some of the people in the chat mentioned it on semiconductor and bullish on for next year. That's more.
You were saying that the other week.
Yeah, so I'm still long it. Obviously, it's not that. That's not the only thing that struggled so far in the last couple of weeks. A lot of stocks have been struggling in the last couple of weeks. So I'm really going to attune the recent performance for how it's going to be in 2026. I still think it's undervalued. I'm long Zeta. It's been on quite a run recently. It's a pretty big position of mine. Path 2026. Long-term path, UiPath, not bullish long-term in terms of the price performance. I think it has a lot of mean reversion to go through. And that's probably when I'll start exiting when it does reach that. I already mentioned Amazon, Meta. Obviously, I'm bullish in Meta. Mercado Libre is one that I'm extremely bullish on for the long term. I think this valuation is just ridiculous for the amount of return you're getting in terms of the financials and fundamentals of the company too. I mean, even Amazon's trying to extend to Latin America again, right? Like, and Mercado Libre is the king of Latin America right now. So there's that. Adobe mean reversion play. But I would say that I'm fully invested right now. I don't really have any cash. I want to get to Skywater. Now, that's an interesting company that I've been looking at for a while, and I totally missed the boat when it was $5 a couple of years ago, but I think there's going to be an opportunity to get back in that one again. But yeah, I mean, that's really it. This space theme, I mean, you could get in now. Ondas was actually up a good amount today, which is surprising. But I don't know. I just feel like if I'm going to be in a company, I don't want to be in a company that's not profitable when it comes to these themes. I would rather be in something that's profitable. I actually haven't looked in their financials, but I need to look more into Kratos. That's something that interests me too. But Oscar, I will trade Oscar again if it does build momentum. But right now, that ACA subsidiary thing they need to vote on that, and we need to see traction. That was actually one of the stipulations of the extension that they provided for the debt ceiling. The fact that they're going to vote again on the ACA subsidiaries, and they were actually supposed to do it before the end of the year. So until we hear some news in that, which probably won't be until 2026 or at least the second week, Oscar is not going to rally insanely. So
So Evan, outside of utilities, what else are you looking at?
Honeywell is one name that I'm kind of excited about this year that I am going to be watching closely. They are doing a breakup similar. The hope is it's similar-ish to General Electric, GE, and kind of how that has been successful, GEV, GEHC, etc. So Honeywell is a name that I am watching pretty closely, and I want to see what the divisions look like once they start to split them up. But that is a theme that I'm a fan of the breakup theme. These large incumbents, which are in a lot of large businesses, breaking apart certain businesses and becoming more nimble. So Honeywell is a name that I am very closely watching for this next year. I'm already in it, but it is a theme that I'm watching. And it hasn't worked out so far, but 2026 might just be the year. BMNR is one that, and just Ethereum in general, stable coins, tokenization, etc., is a theme that I just see coming so rapidly. So maybe it isn't Ethereum, maybe it's Solana, maybe it's something like that. Maybe you want to play it through the SoFis of the world or the financials of the world, the companies who are going to be directly beneficiaries of this while also getting the AI beneficiary. So maybe it's financials, maybe it's fintech. I'm also playing it through BMNR and Ethereum, but that financials theme is something that I'm excited about for next year as well.
Regionals or large financial centers?
I'm too dumb to be able to play banks. These things are black boxes. So I would play them through ETFs. If I'm playing this theme, it's through fintechs and Ethereum. So I like SoFi, and more names like that than the central bank than all the banks. But I really do actually think those banks are probably going to be a good thing this year. I just don't have the ability to go in and stock pick within that.
some people are talking about Shift 4. I was bullish Shift 4. I had a trading position on it and then I got out, but I don't know. Jared Isaacman isn't really there anymore. So it's I don't know if I mean, maybe it might go up, but he was the founder and he already moved on. I think he's still the majority shareholder of Shift 4, but I mean, he's the administrator of Nassau. So I don't think he really has time to manage a company. Although, I think a lot of it really has to do with the restaurant and hospitality industry. So if you look at a lot of restaurant stocks right now, they've been drifting downward, especially Texas Roadhouse, which is arguably one of the best restaurant chains in the entire world. In fact, that probably has been the most expanding in 2023 and 2024, and it is probably the most popular one in the Midwest, Southwest industry. If those stocks are not rallying, it'll be very hard to argue for a lot of these other companies that are very strong on the hospitality sector and restaurant sector to rally, namely Toast, right? So I'm very bullish on Toast, but I mean, why isn't it getting a bid? It's because hospitality and restaurants are just not doing good right now. I think a lot of that scare really comes with the consumer, right? So there's a lot of macro things that are holding these sectors down, but if you really look under the hood in the S&P 500 sectors, there's only 4 sectors that are actually doing really well right now, and financials is one of them. I wouldn't say that it's Tom Lee criminally undervalued, but it definitely has momentum there. But yeah, I mean, you got KRE as the ETF for regional banks, and then you have XLF, of course, for the S&P 500 sector and financials, which is near all-time highs and finding all the momentum in the last couple of weeks.
Well, Elon's post today was quite interesting, saying that the first Colossus data center located in Memphis went online and they're using 100,000 NVIDIA chips and that they're going to purchase a lot more for Colossus too because they're doing an 810,000 square foot facility. So I still think Nvidia 225 to 250 2026 is going to happen. And Sam, believe it or not, I'm getting closer to pulling the trigger on Broadcom. The
Yeah, I
dip
mean,
on Broadcom made it so interesting.
Broadcom is the king of ASICs, right? NVIDIA is the king of general compute, right? So they have the Hopper series, they have Blackwell, and then they're going to have the Rubin coming out in the next couple of years. They are the general compute, the all-encompassing, the chat GPTs for GPUs and whatever it is. ASICs is like specific tasks, application-specific integrated circuits. I actually said this a lot on the stream, is that if you want to be bullish ASICs, Broadcom is a leader of that, right? So they don't need a lot of the market share, which the market already knows. Look, NVIDIA is going to go from like 80% market share. I think it's actually less now to like 70%. But that doesn't mean NVIDIA is going to go down, because we're talking about a TAM that's going to be like $4 trillion by 2030. So NVIDIA is still going to be a beneficiary. But these ASICs that are becoming more popular with the TPUs, which of course Broadcom helps design, they're supposed to be going from $25 billion from Google as far as semiconductor revenue in just that segment alone to 50 million in the next couple of years. So we're talking about a double, and then I think it's another double. So I think it's going to be like a quadruple or a triple or something by 2026 end of year to a double in 2026, 2027. So Broadcom is definitely going to be one of the beneficiaries. The question is, when's the bottom? Where's the bottom of Broadcom? We don't know. We don't know if it was a dead cat bounce or not.
Yeah, we need to see the next 3 months and get the next earnings report. But it may have been the bottom based on the valuation at this point on an earnings basis. But we need that next earnings report to come out. And then the last thing before I go, I'll stay till 8. I want to get both your opinions on Netflix and Warner Brothers. So let's start with you, Evan. Do you think Netflix gets this deal done, or do you think Paramount is going to prevail, even though Warner Brothers is expected to decline Paramount's latest takeover offer?
Yeah. Before the deal was even expected, Paramount was coming in. Yeah, we're gonna come in kicking and screaming. You're not gonna just get this through. I don't want to offend anyone, but to me that feels like a loser's mentality, and they're probably gonna end up losing this to Netflix. I would put my money on Netflix getting this closed.
Well, Netflix can
Although,
afford it.
actually, wait. One thing I will say, that does not take into account the Trump administration blocking this, which I did see some rumors of. So with that withstanding, Paramount's tactics seem like the tactics of someone who's about to lose.
Sam?
I have no say. I'm not a Netflix shareholder, but I don't think this is gonna. This is, well, I don't know. Maybe it might end. Like, who knows? But Netflix wants it. I don't think they need it, but I think they want it, and it'll definitely create a monopoly for them. Actually, I don't know. I don't think Netflix needs it, but maybe they think they do. But whatever it is. But yeah, no, I agree with the whole Trump administration. They obviously have the backing for Paramount to get it. Anyways, guys, I gotta bounce. I will talk to you guys later. Good
Yeah,
talking to you,
good.
Steve
Good to
and
see you,
Evan.
Sam. Thanks for coming.
Appreciate you, Sam.
So, Evan, here's where I'm at on the Netflix deal. As a Warner Brothers shareholder, I want Paramount to come in because I want a larger cash offer. Where I think it's going to lead to is the FTC. I don't think that they're going to allow Netflix and Warner Brothers to merge only because of how large of a company it will make them. It'll give them over or close to 500 million accounts and subscribers, which is huge compared to Prime and Disney and everyone else. I think
And this is a
Netflix needs
scale
it.
game.
I think Netflix needs it. And I think they're going to try to do something to get it because it gives them so many synergies and it gives them such a huge library of content that it is a great deal for Netflix because these assets are never coming on the block again.
Yeah, that's fair. Wherever they end up will probably be. We're gonna get into too big of behemoths for it to end up coming up. And also, this content making space is really a game of scale. 500 million is probably that scale where I don't see how too many other people will be able to compete with the amount of money you need to spend on this content. None of these streamers are profitable. Maybe just Netflix now. Disney's not profitable in their streaming division. I guess I haven't looked specifically at Warner Bros. Discovery. My guess would be they're not profitable in their streaming division.
Well, the big problem with allowing Netflix and Warner Brothers Discovery to combine is what does it do for legacy media and linear TV? It is just, I think there's too many problems with that. So I don't know. We'll see what happens. Even though they're going to spin out the traditional networks into a different company, I think that they're going to get too big with the movie studio and with HBO. The reality is that if Warner Brothers and Paramount combine, they're still the number three. They still aren't even bigger than Amazon Prime. And arguably, they're smaller than Disney, depending on what Disney's new numbers are.
I find Disney to be in a very interesting position. It's a name I hold, and it's a name I am excited about going into the future. And I'm happy that they are not a part of this bid.
Yeah, there's two companies that a lot of people hold that I just can't get behind. Unfortunately, it's Disney and Nike. And maybe I'm wrong on them. I need to do another look at them. They just don't excite me. They're such hard businesses to run. I mean, I don't know. Disney's, I'll take another look at it. You like Disney a
What's
lot?
what's to your left behind you?
Baby Yoda. Yeah, I know. They own LucasArts and Marvel. I get that.
No, I'm just throwing it out there. I do like Disney.
Here-
I'm a fan of the streaming aspect of it. I think the
Here's my
ability
problem.
to, yeah,
I look at Disney and every other company now as, can I make more investing in Disney or more putting in an S&P 500 index fund? And Disney has not traded at 200 in over a decade. So my thing is, what's the chances Disney doubles in the next 5 to 7 years versus the S&P? And when I look at the business, it's hard for me to really see it because they've only gone up 15% the past decade. And the past 5 years has been very difficult, down 37%. So what am I missing here with them?
the honest truth is probably it's something that I am missing, holding on to the idea of liking the company, and hoping that the stock can start to turn it around. I don't think it's a crazy statement. My my thought process is this will not be a company that I think it will beat the S&P 500. I don't think it's going to pull Nvidia over the next couple of years. So for me, it's a diversification part of the portfolio where I think that there's a lot of parts of the streaming world that is really good. But what gets me excited about that is the in-person abilities of it. And Netflix will probably get more into this. But I think Disney's foothold in the travel and leisure space is something that I personally get excited about. And I think their IP is something that they will continuously be able to upcharge for. And yeah, so
So
I don't
let me
think
ask you this
you're
about
saying anything
the
wrong.
IP, because I think this is where I get very disenfranchised with Disney. Is Mickey, and this is, look, I don't have kids. This may be a stupid thing to say, but I don't see my nephew watching anything Disney. He's 9. Okay, not a thing. Is Mickey Mouse and the stuff in the Disney portfolio, when I break it out as Disney and then Marvel and then Lucas, is the Disney assets still really relevant? I get Frozen and that stuff, but is all the old school characters, is that even still monetizable compared to everything else? And I don't have an answer for that. And I really don't know.
Yeah, I wish I could give you answers more than just my opinions. Like I have seen my own niece get very excited into Mickey Mouse and the whole Mickey Mouse Clubhouse and all that stuff. Um, but then again, that's just one or two empirical stuff. So my answer to you would be yes, but I don't have necessarily data to come in and answer that on the back end.
Yeah,
And
I'm
I'm sure
gonna.
the chat I've seen the chat go both ways a little bit on this one. So
Yeah, Disney's always a company that people think can do well, and it very well may. I mean, once again, it's Disney, so I don't think it's a situation where is anybody going to be surprised if Disney's at 150 or 175? No, nobody's going to be surprised. So it could definitely hit that. The problem for me is when I look at the forward projections, I'm seeing, and I'll show it right now. We can end on this segment. So I'm looking at the forward projections, and and I don't necessarily care as much about revenue growth, but it's a very low growth business over the next several years. And I only care about this year and the next 2 years because of the number of analysts that are putting their numbers out. But very low growth. And if it's low growth, how are they going to really expand their profitability? And I guess they're buying back shares, or maybe the street is figuring in that with inflation coming down and rates coming down, they're going to expand EPS. I have to look at the cash flow statement, but it trades at a low valuation already. What's going to get the market excited about it? So I don't know. If it's a valuation play, I think that Disney, of all things, should probably trade around 20 times, and it's undervalued from that aspect because it does have a lot of staying power. But I guess I got to do more research on it.
Yeah, I'm looking on Seeking Alpha as well at the forward PE 17.
Yeah, let's
You know,
see. All right, so okay, this is interesting. I guess I haven't looked at Disney in a while. So they've increased their cash from operations by a ton. They're doing 10 billion in free cash flow. That's okay, changing my mind a little bit. And just like I thought, they started a buyback program, which is why the EPS looks like it's going to jump. Maybe that's enough. I don't know.
I'm sitting here down myself. The right answer probably is your money opportunity cost. Your money is probably served elsewhere.
Yeah, I
I
don't
think
have
that
a
this is
right
a
answer, so
yeah,
I
I
can't.
think this is a company that will compound slightly better than the S&P 500 is where my guess would be.
Oh, whoa, hold on. Lena is saying that Nike CEO bought 1 million of Nike stock at 61. So that's coming
Yeah,
off the heels of Tim Cook buying Nike stock also.
yeah. He bought 16,000 shares. He now has
Oh.
241,000 shares. So he was at like 225,000 shares before the CEO, and he brought it up to 241,000.
All right, everyone. I guess I am going to be doing more due diligence on both Disney and Nike. I am going to say at the moment, I am undecided on both of them. And I will come back to everybody with a report on Disney and Nike. And I will let you know what I think. I'm going to go through the full set of financials again and look at all the latest news and see if there's something here I'm holding in judgment that I should let go and come up with a new thesis.
Can I say two more things before we go?
Of course, have at it.
One, if you could do me a favor and look into Honeywell as well, I'd be curious your thoughts there. It's a play on the breakup of the company. So what it is today, less than what it's breaking up into and what the future of that could be. Second thing is if you guys are in here and you are enjoying the stream, I see 600 people in here. My guess is there's at least a good amount of you guys who are not subscribed yet. You should definitely subscribe to Steven's channel. Like I said earlier, this guy is full-time streamer every night. Literally tomorrow night on New Year's Eve, he will be there from 8 p.m. till midnight, whatever it is, 1 a.m. If you guys are not subscribed to Steven's channel, you are completely missing out. Once you do subscribe, right to the right of that, there is a bell button. Hit that. That will give you notifications whenever he goes live. So if you enjoy these streams, sure, you could just be like coming from Ahmed's channel or whatever and know when it's going to come in. Or throw on that notification bell and get notified whenever Steven goes live because these streams are awesome. And the full-time streamer, how could you miss this? I appreciate you, sir.
Appreciate it. So I'm going to do you one right now. I'm going to look at Honeywell very quickly. And so financials, and I need to look more into what they're breaking up and how they're going to do it, but just a full-blown company, it is interesting. So, I mean, they're not trading at a crazy free cash flow valuation. Their free cash flow is 5.1 billion, and they have a 125 market cap. So, not a crazy price to free cash flow. So, on a breakup, depending on how they stagger it, the sum of the parts could be worth more than the whole thing. So, how is this company being broken up? Do you know into how many companies and what divisions it is?
Sorry. I thought I was unmuted there. So they already did one of them, Solstice, ticker SOLS. I believe that's one of the three that they're breaking them up into. Automation and aerospace are the other ones.
So what do they do in
up.
aerospace? Because that could catch a bid.
I don't want to say anything wrong here.
Okay, I'll look into it.
Propulsion, avionics, navigation, and related systems on most major commercial and defense aircraft platforms.
Okay. Yeah, it's not heavily indebted. It's got a bunch of cash on the balance sheet, good free cash flow. It's interesting. I will definitely look at it.
I would love your
Evan, is there
feedback.
anywhere else that people can find you other than X?
Hopefully on Steven's stream sometime in the nearest future. Subscribe to this channel.
Yeah, you always have an open invite. Just shoot me a message whenever you want to come on, or come in the chat and say, send me a link.
I appreciate you, sir. And I know I sent you a message. I want you on the show as well. We'll get you there. I'm a big fan.
I
appreciate you.
appreciate it. The problem is you guys do the show in the middle of the day when I'm at work. So I need to figure out a day when I take off and give you heads up, and we can figure something out. If you guys
Or
can
we do a little
something-
opposite. Steven Furlow's worth it. We will make a night show.
If you can do something, like I can get on at 5 p.m. If you can do a Tuesday or a Thursday at 5 p.m., I will make it because I work from home those days.
Perfect. That is actually a good time. By the way,
Okay.
Kathy Wood just put out her trades for the day. Nothing that interesting. Twist, Intelia, Beam, Pacific Bio. She sold Shopify and Roku. She sold some Rocket Lab as well.
Nothing surprises me anymore. Nothing. Nothing.
All right. That was my ADHD there. I apologize for that. But
Oh my God.
yeah.
Nothing surprises me with her. All right, everyone. Please go follow Evan on X. I will see everybody at 9 with Tanner. Enjoy the next hour. We'll see everybody in a little bit. Thank you for coming. Really appreciate it. Thank you for becoming a member, KCP. Appreciate it. And then Tamer, thank you very much. Take a look at Target. I have looked at Target. I'm interested in Target. I need another quarter report to go through. I need to see what the turnaround looks like. But from a valuation standpoint, it is very interesting. I will get back to you with more research on Target. All right, everybody. We'll see you at 9 o'clock. Thank you very much. Have a great night.